In this presentation, we're going to look at the interpretation of the additional information as per question 10.1. Read the required part of the question first. Identify what you need to prepare. Our focus in this specific presentation will be on the statement of profit or loss and other comprehensive income, as well as the statement of financial position. Also identify your financial year. In question 10.1, the financial year is ending on the 28th of February 20.8, therefore it must have started on the 1st of March 20.7. All income earned during this financial year must be recognized, as well as all expenses incurred. Remember the accrual concept. Then also determine which inventory system are you using. If you see cost of sales in the pre-adjustment trial balance or any balances given to you, then we will be using the perpetual inventory system. But if you see the purchases in the pre-adjustment trial balance or list of balances and totals, then we are using the periodic inventory system. In question 10.1, they've given us purchases as part of the pre-adjustment trial balance, and therefore this question makes use of the periodic inventory system. So how will the additional information affect our statement of profit or loss and other comprehensive income and the statement of financial position? Let's look at the additional information. Point number 1 said the stock taking done at the end of the financial year showed that the inventory to the value of 27,890 Rand was on hand. Whilst in the pre-adjustment trial balance, they've given us the opening inventory at the beginning of the financial year as 34,807 Rand. Therefore, the opening inventory given to us in the pre-adjustment trial balance, we will use that to help us calculate the cost of sales in the statement of profit or loss. Whilst in the additional information, we will use that 27,890 Rand as our closing inventory to help us calculate the cost of sales in the statement of profit or loss, but we will also use it as part of the inventories in the statement of financial position, and specifically as part of the merchandise note to the financial statement. Still in additional information number 1, they have also said that we have stationery of 540 Rand on hand. In the pre-adjustment trial balance, they've given stationery as 5,340, meaning that they've actually given us the expense. We have used 5,340 Rand according to the pre-adjustment trial balance, which is not the truth, because we actually didn't use all that stationery. There's still 540 Rand unused. Therefore, if we had to do the adjustment of stationery on hand, we would have debited stationery on hand and credited stationery. Whereas stationery on hand would be recognized as part of our assets at the end of the financial year in the statement of financial position. It will form part of our inventories, but we would also have a stationery expense, which we need to decrease with what is still on hand. Number 2, the packing material on hand was not suitable for the new range, but it could be sold to another trader for 3,500 Rand. Therefore, we need to readjust the value of our packing material. We have it in our books as 5,400 Rand, but we can actually only realize 3,500 for it. Therefore, an adjustment to the net realizable value needs to take place. So we're going to debit packing material written off. That's going to be our expense in the statement of profit or loss with 1,900 Rand, the difference between what it is in our books and what it should become worth. And then we're going to credit our asset packing material on hand, because our assets need now to, or our packing material as an asset need now to be recognized at the reduced amount of 3,500 Rand in the statement of financial position. In additional information number 3, 458 Rand was received from a debtor who owed us 1,000 Rand. The 1,000 Rand was already written off 2 years ago during 20.6. So basically, this is a part of our credit losses that we are actually recovering. But the bookkeeper recorded it as debit bank. We've received the money, but credit debtors control are red. That shouldn't have been taking place because the debt has been written off. This are red is not a debtor in our books anymore. The entry should have been debit bank, credit losses recovered. So now we deal with a correction of an error. We need to debit the erroneous entry, cancel the debtors control R red, and therefore in our statement of financial position, our debtors control need to be reduced. Debtors will form part of the trade and other receivables as part of current assets. And we need, in our statement of profit or loss, recognize the 458 Rand as an income. Therefore, we credit losses recovered. At number 4, the rent for February has not been received. Basically, the last month's rent has not been received. So we have got an income receivable adjustment. We've basically received rent for 11 out of the 12 months. So if we look at the rent income in the pre-adjustment trial balance, 2,310 Rand, that is representative of 11 months rent income. So what is the rent per month? It is basically then 210 Rand per month. So we need to say, but this is income that is still receivable, owed to us, like debtors are owing us money, but this income receivable will form part of our other current assets in the statement of financial position. And we recognize the income that we should have earned, although we didn't receive the money. We did earn the income. Therefore, we need to credit our income and recognize it as such in our statement of profit or loss. So now the rent income must increase with this 210 Rand. The following was not recorded. Firstly, 325 Rand that must be written off. So it is basically credit losses that we need to recognize. If we would have done the adjustment, we would have said debit credit losses. That will have an effect on our statement of profit or loss and is going to form part of our other expenses, decreasing our equity. And we would have reduced this data and take this data out of our records. Therefore, my asset debtor will decrease on the credit side. It has an effect on my statement of financial position. Debtors form part of the current assets, specifically trade receivables, that will now be reduced with 325 Rand. The interest of 213 Rand was not yet recorded. Interest earned and received on the bank balance. So if we would record this, we would say we receive the money in the bank, therefore our asset bank is increasing on the debit side. It affects my statement of financial position, part of my current assets, and as part of the cash and cash equivalents note in the statement, notes to the financial statements. We will add the 213 Rand to the bank. They've given us the bank as favorable in the pre-adjustment trial balance, 51,000 Rand. So now the bank is increasing to 51,213 Rand. But we have earned this income and we have received it as well. So now we credit the interest income. That will have an effect with my statement of profit or loss. Interest income falls under my finance cost, and I will add that then underneath the finance cost in my statement of profit or loss. The allowance for credit losses should be adjusted to 1,627. It is currently, as per the pre-adjustment trial balance, 1,200 Rand. So we can see that it must be increased with 427 Rand to become 1,627 Rand. Therefore, if we had to record this adjustment in the general journal, we would have said debit credit losses. In our statement of profit or loss, this credit losses will form part of my other expenses. Now, my credit losses is not only the 325 Rand from the previous additional information, we now need to add this 427 Rand also to credit losses in my statement of profit or loss. The allowance for credit losses itself is a negative asset, and when it increases, it will be credited. So this 427 Rand will now be credited, so that in the statement of financial position, as part of the note of trade receivables, the new closing balance of 1,627 Rand will in the end be deducted from my debtors. Depreciation on buildings should be provided at 2% per annum on the straight line method. Straight line method's formula is usually the cost less any residual value times the depreciation rate times the use of the asset during the financial year. In this case, there was no residual value, so the cost of 186,000 Rand will be multiplied with the depreciation rate of 2% per annum. That gives us 3,720 Rand depreciation for the year. Depreciation will be treated as an expense. Therefore, in the statement of profit or loss, we will have depreciation, at this stage 3,720 Rand, and the negative asset accumulated depreciation on buildings will be credited. That will affect my statement of financial position, specifically the note for property, plant and equipment. And in the note for property, plant and equipment, this depreciation will form part of the movements during the year, but the 3,720 Rand will also be added to the accumulated depreciation that was given to us at the beginning of the year, so that we can calculate what is the accumulated depreciation on buildings at the end of the year. We need to read additional information 8 and 9 together, because it all deals with vehicles. Depreciation on vehicles should be provided at 20% per annum on the diminishing balance method. And then also included in the balance of the vehicles is a second-hand vehicle that was purchased for 20,000 Rand on the 1st of November 20.7, and it was also available for use immediately. The old vehicles, as per point number 9, was purchased at the beginning of the financial year, and there's no residual value. So firstly, we need to determine, but what is the cost? The cost of the old vehicles, existing vehicles, was the total given to us, 140,000 Rand for vehicles, less the 20,000 Rand of the new vehicle purchased. That will then give us 120,000 Rand. The accumulated depreciation on vehicles was given to us as 40,000 Rand. That accumulated depreciation is basically the accumulated depreciation on the old vehicles, as it was the balance of accumulated depreciation at the beginning of the year, because our current year's depreciation must still be provided. Remember that we are going to calculate depreciation on the carrying amount of the asset. Therefore, for the old vehicles, we are going to have the cost, 120,000 Rand times 20%. They were purchased at the beginning of the financial year. We had it for the full financial year, and therefore 16,000 Rand. Regarding the depreciation on the new vehicle was purchased on the 1st of November 20.7. So basically we have only used it for 4 months in our current financial year. There's currently no existing accumulated depreciation, as we are only going to start to depreciate it now. So when we calculate the depreciation on the new vehicle, we get 1,333 Rand. If we had to journalize the depreciation, we would have said debit depreciation. It is going to affect my expenses in the statement of profit or loss. So for the vehicles alone, it's going to be 17,333 Rand. We need to add the old vehicles depreciation to the new vehicles depreciation. But. In our statement of profit or loss, we only have one depreciation expense. Therefore, we will take the depreciation on the buildings plus the depreciation on our vehicles, and that total depreciation expense then for all my tangible non-current assets will now in this question be 21,053 Rand. Remember that in your statement of profit or loss. Okay, and then with regards to the accumulated depreciation on vehicles, of course, a negative asset, the total 17,333 Rand. This will affect my statement of financial position. We're going to show this effect in the note for property, plant and equipment. The 17,333 Rand will be part of the movements, the depreciation during the year. And then we will take the 17,333 Rand, add it to the accumulated depreciation of vehicles at the beginning of the year to determine what is my accumulated depreciation for my vehicles at the end of the financial year. On 28 February, 180 Rand was paid for carriage on purchases. It was recorded, but the goods were only delivered and recorded in my next financial year. So we have basically paid for an expense in advance. If we would have journalized this adjustment, we would have said debit expenses paid in advance, 180 Rand. This basically will affect my statement of financial position because expenses paid in advance are treated as part of my other current assets. And we would have credited carriage on purchases. This will affect my statement of profit or loss. It will form part of the calculation of cost of sales. So in the statement of profit or loss, my carriage on purchases must now reduce with the 180 Rand because it was an expense paid in advance. The interest on the long-term loan is payable every 3 months. The interest rate is market related, the last additional information bit. No interest expense was actually recorded. There's nothing appearing in the pre-adjustment trial balance. So we need to have an expense that is still payable. We did incur the expense. As soon as we have a loan have a shadow that's following that loan, and that shadow is called interest expense. So it's basically an 18% long-term loan as per the pre-adjustment trial balance, 150,000 Rand. It was obtained on the 30th of November, 20.7. So basically, we only had this loan for 3 months where we have incurred an interest expense. Therefore, the interest expense is 6,750 Rand. Recognize the interest as an expense. It will affect your statement of profit or loss, and specifically the finance cost, and credit the expenses payable with 6,750 Rand. This will affect your statement of financial position, as you have the obligation to still pay this. Therefore, it's forming part of the current liabilities, and specifically trade and other payables. We hope that you have enjoyed this presentation, and good luck in completing this specific question.